Hi folks, Lee Gettess here with the Market Sense for the week of February 18th, 2014. I'm very grateful to have charts from the Trade Navigator software to show you. And we're looking at a weekly bond market chart here, and you can see bonds after a nice little rally have backed off a little bit and look like they might be trying to step back up a little. This is kind of a difficult week here. We're basically looking at resistance around 134.05 at the upper moving average and support around 132.04 at the lower moving average. They could break out of either side of that without too much trouble. A move down to this highest point in this little sideways congestion area here is about 131.12. That would be a normal place to break down from if they're going to turn and go back up again. And this previous high here is, I think it's 135.03, so that's also a reasonable target. I'm still kind of thinking that they want to go higher, that this is the beginning of something a little bit higher. I don't know if it'll stop at this upper Keltner or really move higher, but that's kind of what it looks like to me. Of course, they turn down and start breaking back into this sideways and lower, and you got to rethink your position. But after making this low, this higher double bottom here above this low is actually a pretty bullish pattern, so I kind of think there's more upside possible in this market, even though fundamentally a lot of people don't think that's true. Now, stocks, we've got a much different situation here. Stocks broke down at the beginning of the year, and they have recovered the majority of it awfully quickly, perhaps too quickly. This is a little frightening how quickly they've recovered. Now, recovering this quickly makes it seem likely that they will make new highs, take out these highs and go up here someplace, and the resistance this week is 1853. I'm a little frightened about what might happen once they do make those new highs, though. And of course, if they don't, that'll be pretty weak also. But 1853 is the resistance we're looking at this week. They only need to hold support. Gosh, that's 1811 is that upper moving average, and that's so far away. It seems quite likely that they'll hold it. Even if they break it, the middle moving average is at 1790, and again, those seem so far away because they have just been relentless since they made this low. Just like 7 days, 8 days straight up here. That's a little disconcerting. I mean, you can see here on a weekly basis, it took them like 5 weeks to come down here and 2 weeks to recover it. That sounds like a really, really strong market, and quite honestly, I just don't believe they're that strong. They could make a liar out of me, though. I mean, I could be saying the same thing in April as they continue to make new highs. But right now, I'm looking at 1853 for resistance and wanting to see if they turn from there. If they do, I think a move down might be rather spectacular. So that's what we've got for you today. Hope you can find something profitable to get yourself involved with. Thanks for checking in to see what we think.